Hello, everyone. My name is Lee Prinkkila, and welcome to the Startup's Guide to the Tax Code, legal tricks and strategies and hacks you need to know when starting a business. First of all, I just wanted to introduce myself. I'm a CPA. I've been doing tax and accounting work for over 20 years. And it's been a wonderful experience. I was very fortunate to work with META and their startup program decades ago to help startup businesses and got to learn firsthand from starting a business from scratch on what you need to know and how do you do it. Also learned along the ways from many mistakes that have been made. And so thought I would just share a quick little seminar on what I've learned and some secrets that you should be looking out for when you start your business. Now, to go into the first slide, safe harbor, this is accounting. Tax law is not actually about perfection. It's about interpretation of the law. I amended a tax return and filed it and actually did another software, amended the return and had a different result. So everyone calculates and estimates tax returns differently. Both were perfectly fine. The difference was negligible on a client. So when you go into it, don't let mine be the only opinion you have on when you're having tax law. Listen to other people, their experiences. But who I am is my value statement is simple. I want to leave the place better off than I found it. I'm not going to be able to cure cancer. I'm not going to be a great doctor. But what I can do is help people keep more of what they earn. By doing that, by minimizing the tax and experiences that they have dealing with the administration, government, the rules, the states. My father was an engineer. My mom was a teacher. So between what I like to do is break things apart, figure out how it works, and then teach people about it. So it's kind of a perfect profession to actually be in the tax and helping people navigate tax law when it comes to their business. So the first thing I want to talk about is if you have a business is not a hobby. Now, how do you determine what is the difference between the two? A legitimate business has a purpose, which is income or profit. Now, I'm not talking about a nonprofit business or a B, but you have to prove that you have an income or profit. And then you have to do this with continuity and regularity. That doesn't mean I'm going to be doing a garage sale once a year and make money on it, and that is supposed to be for profit. The IRS has pretty much determined that there are 9 factors when determining whether a business is legitimate. Why we go through this is we try to make sure that your business is legitimate and that we focus on it. It's not very difficult to do. So the first rule is you have to carry it like a business-like manner, which means accurate books and records. Once again, the accounting comes into play. Keeping it on a spreadsheet or QuickBooks or some kind of accounting software makes it legitimate and proves the case. Also, not blending your personal and business into one account. And the next aspect is the time and energy that you put into the business. Many times, people just do 1 or 2 hours. Really, if you're going to be in a business, you should focus on talking about the business, working on the business, meeting about it, and at least doing something to document it. Perfect example is a blogger. That's legitimate business. When you look at the time it takes to write each and every time a weekly routine of putting a blog up, that is a legitimate business. The question is, how do you profit from it? That's the next item that you want to talk to. The next is whether your losses or circumstances are beyond your control, which means that if your plan is to always lose money, it's not a business. But if your plan is eventually you're going to be making money, other than the normal startup costs that you're figuring out your business model, you're pivoting, you can have those losses. They have to end. And then the last question really that you get into is, do you actually have the knowledge to carry out your business? I don't have experience in quite a few businesses. So the IRS would go and say, Lee, what do you know about opening up a school? Well, I think I'm going to teach accounting. Oh, you do know about that. But if you were to open up a school and teach English, clearly you're not the person. So those are the types of things in the questions they ask. Those can be addressed easily in your business plan. Once you start writing the business plan out, you address that this is a legitimate business, and then you can go forward. Really, when you get down to it, the business steps, write your business plan. Why are you here? Really, each and every business plan is going to be unique. Some of them are one pages. I have unfortunately read through 150-page business plans, sat through 8-hour presentations on a, that is not really a great business plan, but it did solve every nuance of what the software was going to do and what it was going to be. Now, next question that you step into is choose your business type. This is where you need to spend a little time and discuss where you want to go and what are your major steps. The third part is register your business. Now, registration comes in all forms and manners, and it depends on your state. We'll focus on the state of Minnesota, where I'm located. Number 4 is getting your checking account. This used to be the easiest thing in the whole steps. Now it's probably one of the most difficult because you almost have to meet with your banker in person due to the money laundering rules. I recommend that you have a bank that you have an existing relationship with, because you'll provide documents and walk through. Many times where I've set up banking accounts online, I've still had to go in to sign the documents, even in the pandemic. Last, fifth part is set up your accounting. Now, the organization that you choose is one of the most important decisions you'll make. Now, when you get into an organization, there are many types. The first is self-employed Schedule C. This goes on your personal 1040 return. Almost all businesses start this way, even if they didn't intend to. You get that first 1099 or employment, or let's say that you decide that you're going to do yard work for your neighbor and he pays you cash. This is where this should be reported. It is a business, lawn care work, and that's where you would report it. It doesn't have the structure. Very simple to do, but it doesn't give you all the advantages of being a business. The next is a partnership 1065. That is just when two people agree on a business that they will go through and be able to put together a deal. You and your neighbor get the lawnmower and start mowing all of your businesses around town. And with that, you have a business. You will then form a partnership and need to file a 1065. It doesn't have any protections. The reason why you actually want to get to the next thing is a corporation. A corporation has a protection, an entity on its own. Now, the first type of corporation, the existing one, is a Schedule C. You might heard it as a Schedule C. Us tax preparers call it 1120 because that's the tax form you file. Very common. Most of your publicly traded companies are Schedule C. The biggest downside to a Schedule C is what you might say is double taxation. That is, the corporation pays its own taxes, and then you will get a wage or a salary, and you will pay taxes on it too. If you get a dividend from the corporation of its profits, you will pay a dividend tax as well. Now, that's not all great. That's not all best. There's other ways to go through. New 2015 was a corporation was called a B corporation. It's a benefit corporation, which means that not only are you running for profit, but you also have a social enterprise or a social justice need to build this enterprise. There are quite a few that have been formed here in Minnesota, and it's a fascinating concept, especially when you want to make the world a better place. The third type of corporation is what we call the S election. Now, the S election was created in 1986, and this was to bypass the C corporation status. Still a corporation, but it has pass-through income directly to the shareholder. There are several restrictions when it comes to an S corporation. Number one, it can't be a foreign entity. Number two, it has to be individual. You also have a limit on the number of shareholders You also have different other rules and regulations when it comes to benefits. The S election has been the most popular S elect or the corporation selection for small businesses since 1986. But since the advent of the LLCs, really it's seeing its end. I think I'm the last one in 2017 to create an S corporation for one of my businesses. I did that just because I want to be up and maintain the rules because I do file quite a few S election returns each and every year. The next company that was formed not too long ago is the limited liability company. This is also filed on Form 1065. The limited liability company is what we see most companies, small businesses starting these days. Technically, there really can be disregarded entities in the LLC. If you were a single member LLC, it will then come on form on your Schedule C. So there's a lot of opportunity and a lot of ways that the limited liability company can work within the tax return. I file it on 1065, usually with an election, just to make sure that we get the return filed, because certain states, even though you file it on your Schedule C, will ask for the return. So sometimes it's just easier to file the return. The next thing and a benefit within the limited liability corporation is you can actually treat it with an S election and file an S election on it. This is a real popular option for many people, especially when they not only want the limited liability company, but they want the benefit of reducing their FICA income. With the S election, one of the benefits is that you have to pay yourself a reasonable wage. So let's say that you're making $200,000 a year in a limited liability company. You work for that company only about 30% of the year. So paying yourself, if you were to hire out that wage at 100,000 for a year, you would say, I should be reasonably to pay myself 30,000. The remaining money on that would come through as a distribution, but would be not subject to the FICA tax. There's a huge benefit and strategy to that. So the next question is, what structure do you do? There is a lot of options, but what do you want to do? Where do you want to go? And do you need any other benefits? Are there other employees? And why I talk about this is most small businesses are truly small businesses. They don't have many employees, or if any, sometimes they're related. And do you need benefits? And why I post this is the little boy that's on there is actually my employee of my CPA business. So I have an S corporation, which is my tax business. The S corporation hires my son, pays him a wage of $16,000 a year to run my IT, my security, my patches, do my marketing, Facebook posts, those types of things. Why is it $16,000? Well, in 2020, the single deduction is $12,400. That means he can file a tax return, take a standard deduction of $12,400. He also then contribute to an IRA of $4,000, meaning that $16,400 is deducted and tax-free. Now, I and he both have to pay FICA on that percentage. There's a good structure for that as well. By him starting to contribute to the FICA plan, he qualifies early. In case he is disabled at age 28 or 29, he's already contributed to the Social Security plan and will already have 10 years in, which usually means you're vested in the plan. So at age 16 to 26, it really makes sense. Plus, then I'm able to defer money. The next question is, where do you want to go? Well, my tax return business is not going to go anywhere. As a matter of fact, the CPA business is pretty stagnant. What will happen is I will take my clients and I will sell them to another CPA business. The negotiation is 75 cents to $1.25 per revenue of my dollar structure. That's exactly where it wants to go. There's not going to be a big gain. There's not going to be a structure. And S election is easy. I would end up being a customer sale and I would take those proceeds. The question is, do I need benefits? No, I do not in the S corporation. Otherwise, my health insurance wouldn't. What else do I have? I have a C corporation. The C corporation employs my wife. There is a structure within a C corporation that says every employee, I'm going to pay 100% of their medical, 100% of their deductible, and every benefit that they have that they would like. So my C corporation is my benefit corporation. It actually is paying the benefits for all the work that my wife does within another corporation, which is a buy and sell of products, and also does the administration for my company by having all the printing, all of the networking, and some of the structure in the rent. It's perfectly legitimate. And so setting up different structures to have different benefits. Now, why is that important? When I first started out on my business, I was paying $250 for family health care. I'm now paying in excess of $1,400 without any claims. Putting it within a C corporation structure, that becomes 100% deductible. And so part of that structure is the way we're able to negotiate. Now, the next thing is if you have employees. If I had employees within that company, I must offer it to all the employees within that company, the same benefit structure. So it's very important to sit down and map out where your structure is going to go. Now, the next thing is now you need to register. The first thing you register is for a federal ID. This is online form. It takes just a few minutes if you have all the documentation, which is your name, your address, your trade business, what your organization is, sole proprietor, partner. Federal ID is very simple, but the number one question they're going to ask you is if you have payroll. I always tell people, if they're going to have payroll, don't fill it out here, change it later on. Why? That will start the clock. Your payroll filing that you'll need to do 941s or 940s and those types of reporting. And you might not be ready to hire employees. So wait until you need to. In Minnesota, there's two filing requirements. The first one is the Secretary of State. Have the business on here. That just tells them I'm going to file as a legitimate business. I'm authorized to do business in the state of Minnesota. There is a filing fee, but for the most part, it's done within a few minutes. I actually used to like driving down to the Secretary of State in St. Paul to file the paperwork. Very nice people, and you're actually able to meet a lot of entrepreneurs who are waiting in line as well, starting their own businesses. The next is the Department of Revenue. There is no go up to the Department of Revenue. You click on, and that is to get a state ID. What they're going to be looking for is if you need to file sales tax, if you're filing products, or if you have payroll. Most of the time, the Department of Revenue number, very simple to get. They'll ask you a few questions, what other taxes that you'll need to file, and you'll be able to go in and out. That's less of an item. I've gone a year without the Department of Revenue getting a number. Most of the time it's an afterthought, but it's always good to have. The next step in starting a business is opening a checking account. You need to have a business checking account that gives you the legitimacy of a business, and it also separates your personal income from your business income. I always love business checking account. Free is the best. Online features, they need to be able to plug into your accounting software. They're able to do payments, bill pay, those types of features are the greatest. The best part about it is build your relationship with your banker. A bank that knows you is going to help you in the future. I can't stress enough how many times the startup entrepreneur not have good relationships with a bank. You'll need it on your journey. I don't care what bank it is, whether it's a local community or a national bank. Find somebody, partner with them. They'll be a great reference for you in the future for all things banking. So one of the things that people always ask me is if I was going to start up, what would be my tech stack? What would be the best thing to start in the business? I always throw out accounting. If you're looking for free Wave apps, I think that's a beautiful accounting software on the cloud. It's free for startup. I believe you get 5 invoices for it. Most startup businesses, it will work phenomenally. CloudBooks, another one. I actually used that one about 6 months ago for a startup, just getting them set up. I really liked it, real easy to use. Software, QuickBooks has owned the market share, probably 85%. I always recommend if you're going to go into that business and if you don't want to be on cloud, buy a copy of the QuickBooks license. It's about $100. And in QuickBooks, It's easy to run. You write your checks, you track your invoices through. And then if you're going to go online, QuickBooks has an online, but I recommend Xero. I'm a registered now partner with Xero. Recommend that. Xero is around $30 a month for online. The QuickBooks, the same features are about $70 a month for QuickBooks Online. So that's why I usually recommend buy the QuickBooks license for $200. You can run multiple companies on it, just like I'm doing. I have one license of QuickBooks, multiple companies. Um, Payroll, when you get to the point of having payroll for free is a free payroll, beautiful software, easy to use to get set up. And then I'm an authorized reseller of Gusto. Gusto is a beautiful, I like to say authorized reseller. All it really is an accountant, and I can hook you up to get Gusto on. Great online platform. They have been taking the market by storm. They got great stack of benefits. So as you grow with a company, this is one where you would like to jump on and then run as you're doing hyper growth. Domain, email, you need to get one. Google's probably the easiest place to get your domain and email. Hook up a website, unstack, just to get a website going. Now you're talking about being a business. If the IRS was to come in and you said, look, I have all of these 4 stacks ready to go, I'm ready to be a business, they would look and say, yep, you're in the startup phase. We understand you're going to lose money. What do you need to do? Now, getting into tax. When we talk about business, what is business and business purpose? I'm going to talk about what I know, which is the accounting business. In the accounting business, I am really fortunate. I would say over 100 million tax returns were filed in the United States, which means that anyone who has a job that makes over $16,000 a year needs to file a tax return. They are a client of mine. So by me going after and looking for that business, I can deduct many things in my life going and looking for the business purpose. So when you go into the taxes in an overview, many of the first challenges that you get into is sales tax. Now, when sales tax has changed since Wayfair, which means that there are 53 jurisdictions, there are 50 states, there are currently 5 states without any sales tax. But they go in and say, if you sell over 100 products or $100,000, each state is different. California is $500,000, Texas is $500,000. But if you do sell into those states, whether you ship a product or you do a service or you download a software, depends. Each one is unique. You will need to collect and remit sales tax each and every one of these jurisdictions that's in color other than white. Now, we're very fortunate that the green member states are SSD, which is the streamlined sales tax states. They went in and they fall under the Wayfair Act that say, look, we're going to make it simple. We're going to make it easy. Here's what we're going to do. The orange states, California, Texas, Arizona, make it more difficult. We want you to collect sales in our state, and we'll probably come after you if they find you and you get large enough to change. So sales tax is one of the items that you need to really identify in your business. Now, how do you avoid sales tax? Don't leave your state. Work in your state, do the business. Don't go off into another state to sell product and tangible products, which sometimes are included as software. The next is payroll tax. The payroll tax was created to get the W-2 earners to pay their side of FICA, unemployment, Medicare. It's currently deferred. We'll not get into that. But depending if you like less than $104,000 roughly a year, $4,000 in a payroll piece, if it's over that, you can defer the tax. The payroll tax is a little complicated. That's why I recommend going with a payroll tax provider if you get into it. If you are a single member of an LLC and need to pay yourself, usually you can get the payroll for free. It'll be a check. Usually you reclassify yourself in December to get the one-time payroll, get your W-2, those types of features. You'll also need to file 941s quarterly, unemployment tax, those types of things when you get into payroll. best to find somebody who will also process you. Best to find somebody who will also process you for free. Or Augusto, I believe, is $6, $30 initiation fee, like $6 per month per person. Now, the next thing is income tax. This is where the focus of this presentation tried to go into. Is income tax is one of the items that was created really in 1913. Now we're going to go quickly through the rest of it. But the number one thing is a credit versus a deduction. A tax deduction is a write-off on your tax return. A credit is the amount taken off the tax. $1,000 credit is a lot more valuable than a $1,000 deduction. As we go through, when we use the term credit versus deduction, there are many credits, but for startup communities and startup businesses, there's one that is most valuable, and that is the 179 tax deduction and the research and development tax. Now, one of the most complicated things that you'll ever face in your tax return is fixed assets. And the reason why is a fixed asset is a balance sheet item, but then can be expensed with Section 179 or bonus depreciation. All income tax is based on income. It's not based on wealth. The idea is you can plan mindfully to buy the right fixed assets at the right time to write them off to reduce income, which in turn does not allow for paying any tax. If you look at the Amazon Corporation, what their entire plan is to actually not pay tax. They take research and development tax credits, they take fixed assets, they pay depreciation, they take all of the credits to minimize their tax situation. That way they can invest more in their business. But one of the quintessential items that happened in 1981 was when Ronald Reagan took over. They found that America was not investing into their future like they needed to. So he created in a new investment called the Research and Development Tax Act. Now, the criteria is very simple. Technical uncertainty, technical in nature, which means sciences, process of experimentation, and a qualified business purpose, that you're going to make money in the future, or is it going to improve an operation? If you do that, you can end up making a deduction. And in that R&D tax credit, it can be qualified for wages paid to employees, supplies used or consumed in the R&D process, and contract research incurred when you hire out somebody. The R&D tax credit has been used by big companies for the majority of time, billions of dollars. Small companies very rarely get into it. This is why startups, and we're trying to educate as many startups as we can to take advantage of the R&D tax credit, especially for technology innovation. That is prime for it. So I work with quite a few startup technology companies, getting them hundreds of thousands of dollars back each and every year from the R&D tax credit. Now, I always like to say, what are the risks? The risks of IRS audits the last 8 years have gone down significantly. The reason why is they're using artificial intelligence to actually find the bad actors instead of just randomly going out. The number of returns being audited is going down because of AI. And number two is they're reducing the headcount at the IRS, and they don't have time to audit. A investigation like Tom Petter's took one agent a full 18 months to prosecute. So if you can imagine how many bad actors there are, there's not enough IRS agents trained out there to get special agents to get all the bad actors. So what they're doing is examining less, using AI to make sure everybody falls within the parameters. All right. Well, thank you very much, everyone.